Hello there, good evening, and a warm welcome to another episode of Business Focus here on TV3 with me, Michael Ubudu. Coming up tonight on the show, recent decision to cut its lending rate by 300 basis points to 25% has been met with calls for further reductions fueled by a continuous decline in the country's inflation rate. Tonight, we ask what will be the appropriate policy rate for the country. Also ahead, advisor of the Bank of Ghana, Ale, fears that non-interest banking and finance will compete out traditional banking institutions, but rather improve financial inclusion and mediation. We'll bring you details of these and many others shortly. And do remember the Business Focus is sponsored by Telecel and EcoBank. Now, every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know the emergency numbers. Well, here's one you'd want to remember: *770#. Yes, *770# is the new EcoBank money emergency number. *770# gives you instant access to loans, fund transfer, utility payments, airtime and data purchases, and so much more, even without data. So there's no need to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank and proud sponsors of Business Focus here on TV3. We'll turn our attention quickly now to the currency and commodities market as well as the treasury bill market to bring you updates on how the numbers are faring there. Well, currently the dollar will be bought from you at 10 cedis 59 pesos, sold to you at 10 cedis 61 pesos. The pound will be bought from you at 14 cedis 21 pesos, sold to you at 14 cedis 23 pesos. The euro will be bought from you at 12 cedis 29 pesos and sold to you at 12 cedis 31 pesos. Or the guided that these figures will be much higher at a forex bureau near you. On the global commodity front, the price of cocoa was up by $427. It's trading now at $8,405 per ton. Gold, however, is down by a little over $55. It's trading at $3,343 per ounce. However, crude oil is up marginally by some $0.17, trading at $66.76 per barrel. We'll move now to the treasury bill front, where the current rate for 91-day bill is 10.2% per annum, a 182-day going at 12.25%, 364-day bill going for 13.10%. Interesting developments on that front. For the first time in a while, we are seeing rates relatively higher than that of inflation. Interesting times to see how all of that translates to the uptake with regards to treasury bills on the market. We'll go for a quick break. When we come back, we'll delve into our conversation for today. Please stay tuned.
How may I help you today?
We'd like to open a bank account.
Sign here, sign here, sign here, and here. And now you draw direction to your house. I need your
current rate is good for the economy, to discuss the nuances of a policy rate of 25% inflation, 12.1%, and Ghana reference rate at 19.67%. And Nelson Kutu, finance and tax expert and head of finance at Melbourne Capital. He's joining us in studio. Thank you so much for joining us.
Thank you.
And then Dr. Egbache Yadom, Senior Fellow, Africa Policy Lens, is also joining us via Zoom. Doc, thank you so much for your time. All right, so straight up into it, macroeconomic indicators looking impressively good, according to some quarters. Majority of targets set for 2025 are already being significantly achieved or almost attained as at the mid-year budget review. From where you sit, this 300 basis points, good enough or could have been better?
Well, thank you very much for having me. I think that the 300 basis points could have, the cut could have gone down further because, as I always continue to indicate, we cannot grow Ghana's economy with a high lending rate. Don't forget that lending rates are also based on, the monetary policy rate. And so in order for the economy to grow, in order for businesses to go to the banks and borrow, we expect the monetary policy rate to come down further. However, let me hasten to add that the monetary policy itself, the rate itself, is a macroeconomic policy tool. The Bank of Ghana uses the monetary policy rate to, as it were, manage the stability of prices within the economy. And so once inflation is coming down, currently inflation is at 12.1%, we expect that the policy rate will also go down further. However, the Bank of Ghana indicated that the policy rate could go down further if the disinflationary pressures continue. I think the cutting down of the policy rate by 300 basis points is a trade-off between inflation and growth. Because at one end, you want to grow the economy by lowering lending rates. At the other end, you also want to maintain the stability of prices within the economy.
Some are also concerned that maybe we've moved a bit too quickly, because if you look at the trend carefully, we've maintained the policy rate significantly at 28%, and we've seen significant cuts in inflation since we moved it up to 28%. You see that from March thereabouts, inflation has dropped sharply up onto where we are right now. So now that we've dropped it from 28 to 25, it means that we may begin to see the rate of decline of inflation slow down quite significantly, don't you agree?
Well, not necessarily. If you look at the trend of disinflationary pressures from January or from December 2024 till today, you realize that in the coming month, we expect inflation to continue to go down further. Reason being that the policies that the government is implementing that are yielding the disinflationary pressure, the policies are still with us. The government is trying to control expenditure. The Bank of Ghana is maintaining a tight monetary policy. We are having a current stable, exchange rate system. So all these factors are actually helping to drive down inflation. So I think in the coming month, inflation will go down further. And inflation go down further, the expectation is that the Bank of Ghana will further cut down on its monetary policy rate. In any case, the BOG governor indicated that banks should be ready to lend at a single digit, which means that the governor himself is having a perspective on where he expects the policy rate to be at the end of the year or in the next 4 years. And so we expect the policy rate to go down further.
Well, but some will argue that the fundamentals that will really tackle the inflation side are still work in progress, like food inflation. As we speak at the moment, some would say that we've not seen any significant intervention from the government side to drastically tackle that angle of food inflation. Also, the issue of fuel prices. We've seen some will call it marginal increase in fuel prices over the last couple of months, especially since the introduction of the energy sector debt recovery levy, as well as and you know how that trickled down to the fact that transport operators recently hinted of a likely increase in transport fares. Doesn't these signal that we are still not out of the woods and we should still tread cautiously and probably keep the policy rate at 28?
The 25% is still high. The 25% will still achieve the objective that 28% has achieved.
Why so?
Because if you look at, even within the sub-region, the policy rates generally are very low. Ghana is having one of the highest policy rates within the sub-region. And so the reduction from 28% to 25% is still high. So I think that maintaining the policy rate at 25% will still help to drive down, disinflationary pressure. Reason why I said that the cutting down of the monetary policy rate by 300 basis points is a trade-off. The trade-off because the economy grew by 5.3% first quarter. We equally expect the economy to grow, but you cannot grow an economy with such a high lending rate. The minimum average lending rate in Ghana now is more than 25%. And you cannot grow an economy with 25% lending rate. And so I expect that going forward, once disinflationary pressures continue to dwindle further, the Bank of Ghana will continue to cut down on the policy rate. And so all the factors that are actually helping inflation to come down. In fact, during the press release that the governor actually read, he mentioned of tight monetary policy as one of the reasons why inflation is going down. He also talked about fiscal consolidation and expenditure prudence that is also driving down inflation. He also talks about easing food, inflation, which is true. I mean, for some time now, we have seen that food inflation has actually contributed significantly to the disinflationary pressure. He also talks about the strong recovery of the cedi. And so all these factors are still with us. They are still helping the disinflationary pressure. And so going forward, I think that the Bank of Ghana will cut down further on the policy rate. As I did indicate, the 28% policy rate and the 25% policy rate may not make any significant impact because lending rates are still high. What is the average lending rate in Ghana today? And so we expect the Bank of Ghana to cut down further on the policy rate in order for lending rate to come down.
Okay.
When the Bank of Ghana cut down the policy rate by 300 basis points, the Ghana reference rate was also reduced to 19%. Now, the 19% plus risk premium of the banks, you realize that lending rate will still be way above 25%.
The other side of the argument is that T-bill rates have fallen significantly. As we speak at the moment, from the figures we showed earlier, it's between 10 to 13%. It's unattractive. The other side too is that as we are lowering lending rates, it's becoming more attractive to lend money. And yet, on the other hand, government is not mopping up excess cash as much as it would have with T-bills. Now, doesn't all of this now lead us back to inflation? I know you would argue that inflation there's a cost-put side of it, but there's also the supply side of money. And it looks like we are maybe opening up too quickly. Don't you agree?
No, I don't think we are opening up too quickly. Because, yes, you realize that just the last two auctions, the money market, government, there was an oversubscription of about 75%. That was the last two auctions. The recent auction...
However, before that, they have missed a lot of their targets.
Exactly. But the recent auction that we had over last week, the government missed it. There was an undersubscription to the tune of 20%. Now, let me also say that monetary policy rate, they determine market interest rate and real economic activity.
Okay.
So the pricing or the interest rate that we witness across the financial system has some nexus to the monetary policy rate. And the monetary policy rate also determines real economic activity within the economy. So I don't think that all the factors that you mentioned will have any negative impact as far as inflation is concerned. The expectation, even the 1 Ghana cedi per fuel that was introduced had no impact on. We equally had a reduction in inflation. And so disinflationary pressures will continue into the future. And once that is going down, we expect the monetary policy rate to also go down further in order for lending rates to be lower for businesses to have some borrowing space to borrow and expand their operations.
Well, the inflation bit you mentioned is largely because, a significant portion of our inflation is imported. So this is a result of the relative stability. But you've also heard the IMF say that government is overly intervening on the forex market and has asked that we tread cautiously. So doesn't that raise eyebrows?
No, when IMF said that the Bank of Ghana is intervening in the market.
Overly intervening.
Well, I think it is within the mandate of Bank of Ghana to intervene within the market for specific reasons. In fact, when you read the Bank of Ghana Act, Section 4C actually gave the mandate to Bank of Ghana to maintain what you call currency stability. And so once that intervention is grounded in law, I don't think the Bank of Ghana is too much intervening in the market. In any case, the intervention of the Bank of Ghana within the forex market is actually yielding the desired result. we have enjoyed relative stability of the Ghanaian cedi right from the beginning of the year till now. So for me, to the extent that the intervention of the Bank of Ghana is grounded in law per Section 4C of the Bank of Ghana Act, I see nothing wrong with that. Once the desired result that we are having, we are getting it. The most important thing is that the stability of the Ghanaian cedi is actually giving breathing space to those who are actually into international business transaction. I mean, now you can import from any country. You realize that the exchange rate is very low, and that is, improving business condition within the country.
Fair point. We'll go over Zoom now and speak to Dr. Eric Boakye, Senior Fellow at the Africa Policy Lens. Doc, thank you so much for your time. I'm sure you'll be following the conversation. Well, you have been very vocal about the fact that the policy rate should have dropped significantly beyond the 300 basis points. Why that call, and what percentage would have worked for you?
So, like I earlier indicated, I think that most appropriate policy rate should have been about 20%, looking at the other indicators which have been pointing downwards for some time. For example, from the start of the year, you could see that inflation has gone down drastically, and it continues to go down. And I'm thinking that by the end of the year, we are likely to enter into the single digit if the disinflationary process that have started continue to the end of the year. Then you look at factors like our international reserve, which is generally good. We are almost around $12 billion, which is almost 5 months of import cover. So generally the money market indicators are pointing to the right direction. The only thing which has been very stagnant, but for the last downwards review, we had done only about 7%, and where the other indicators are doing in the region of about 60% downward for the cedi has been very stable or appreciated over in excess of 40%. It appears that indicators are good, and if we don't tackle the monetary policy rate feeding into the lending rate, industry will suffer, and it is very evident in the if we look at the half-year budget review, industry did not grow as expected. We did around 3%, and generally, if industry is not doing well, it means that we are not also producing as we are supposed to, and it can even affect employment in the general economy. So we are likely to get to a situation where things are cheap because of the dwindling or falling inflation. You will see that foodstuffs or things are cheap, but the money to buy may be difficult. Today, I think a ton of iron rod is selling around 6,300, which has gone down drastically. But that's whether people are able to get money to buy is also another thing. So I think that the policy rate should have gone down a bit more to about 20% to bring the reference rate. Currently, the reference rate is doing around 19%, which is generally good. But I think we can do better. If we compare to neighboring countries like Nigeria, the Francophone has a different monetary policy regime, so it becomes difficult when you are making analysis or comparing them. When Nigeria inflation was around 22%, their policy rate was doing better than us. When we were doing 28, they were doing around about 27.5%. Generally, when our inflation was even in the teens, So I think that if we believe in the figures that are going down and to a larger extent reflecting in the general economy, we should be able to make funds available to support industries, or not even industry, the general economy, to be able to obtain credit at a relatively lower rate, to boost production activities. I am worried about the fact that if this continues, it will shrink the industry's ability to get funding. And we should also forget that taxes have gone up in terms of fuel levies. It has gone up. And the cost of doing business is likely to be high as compared to the availability of funds needed to support the cost of doing business generally going up. Tariffs that have also gone up in the way will affect industry. So the only breathing space for industry is the ability to get funds at a cheaper cost. If industries start getting funds, but for this recent review, industries in previous months were getting access to fund around about 30% and 28%, which is generally high. So coming down better, I think it will improve the general economic situation, and it will also, in a way, boost production. You see, the idea that when we cut, when we hike the lending rate, it will be able to contract consumption to bring down inflation is generally not the case. The case is, do we have the needed supply to meet the increase in consumption or demand? So if the supply has gone up by reason of funds being available at a cheaper cost, then we will be able to boost supply to meet the demand, which will cancel the basic idea of more money chasing fewer goods in a simple term of inflation. So government should find a way to stimulate the supply side, so that the general economy there'll be some breathing space for businessmen.
Interesting, but Prof, you're basically projecting an 800 basis points cut rather would have been more appreciable. But the question is, wouldn't that be a shock to the financial system? 800 basis points is quite significant, don't you agree?
Yeah, it's quite significant, and based on if other figures are falling, the cedi has appreciated over 40%. You look at inflation that has done around has fallen around 60%. It tells us generally that things are better, and trying to hold that link of the monetary policy at a very high rate. There's some sort of mismatch, and it won't create shock. Why won't it create shock? Government is deliberately trying to reduce crowding out by bringing the treasury bill rate, the rate down to make it less attractive. So the financial sector should have another avenue to keep their funds. That is to the businesses, and if they are not putting it into the money market by giving it to the government, then there should be easy funds for businesses to get. So I think there's by bringing it down, it will consume, or it will help the government objective of trying to stay away from competing so much with private sector in the financial space. That's why the treasury rate deliberately has been brought down, throughout the year. So we should complete the cycle by ensuring that the policy rate is low and businesses are able to get funding at a cheaper cost.
Okay, but the question really is, what's the guarantee that if the policy rate is lowered, actual lending will go to the real sectors of the economy? Before you respond to that, Nelson wants to quickly react to some of the things you've been saying.
I think that Doc calling for the policy rate to be reduced by 800 basis points is too ambitious. We need to tread cautiously. We have made so much gain this year, and every policy decision we make must be tailored towards sustaining the gains that we have made. I did indicate earlier that monetary policy rate, there are monetary policy tools that the Bank of Ghana or central banks in general, they use to maintain stability of prices within the economy. And the fact that monetary policy rates are lowered does not necessarily mean that lending rate will also be lowered. The reason being that monetary policy rate is not the only factor that banks take into consideration when they are pricing their credit facilities. And so once you are lowering the monetary policy rate by 100 basis points, 800 basis points, it means that you are very confident that inflation will continue to dwindle. What I think the Bank of Ghana is doing is a trade-off, as I did indicate earlier, between inflation and growth. And so once you reduce the rate sharply by 800 basis points, you are going to create some sort of distortions within the system. And so every policy decision taken by the government must be tailored towards, achieving a specific objective, and that is stability of prices. So I think that the 800 basis point is too over ambitious. I think the 300 basis point is a bit moderate. Now, upon the cutting down of the monetary policy rate, the Ghana Association of Banks also reduced the Ghana reference rate to 19%. Now, that 19%, in computation of lending rate, the bank takes into consideration the GRR, that is the Ghana reference rate, plus the premium.
Okay.
And the premium, the bank takes so many factors into consideration when they are fixing the premium. Now, even the Ghana reference rate itself, how is it determined? It's determined by taking 40% of the policy rate plus 40% of the 91-day treasury bill and then 20% of the interbank rate. So even at the 25%, which is the current monetary policy rate, it means that we are taking 40% of it. And we are also taking 40% of the 91-day treasury bill rate and 20% of the interbank rate. That will give us the Ghana reference rate, which is now at 19%, before the banks will add their premium.
Okay.
So I think the 800 basis point, as Doc is suggesting, is too ambitious. We need to trade cautiously in order not to derail the gains that we have made.
It's good you mentioned the reference rate, but the question is, if you look at the figures on the indicators for the reference rate, 91-day treasury bill rate is around 10-point-something%. The policy rate is at about 25% as we speak. That's the highest indicator amongst the lot if you look at it. The risk premium, I'm not sure what the figure is at the moment. So the question is that it appears that the macroeconomic indicators have created enough space for us to maybe take that bold step, don't you think?
Well, yes.
Because
yes,
the only reason why the reference rate is at 19.65% is because the policy rate is still high at 25%.
Yes, but there are some inflationary tendencies within the system. You understand? There are some inflationary tendencies within the system, and you don't want to provoke those inflationary tendencies. That is why the Bank of Ghana is trading cautiously in terms of the number of basis points that they are cutting. In any case, the objective of the Bank of Ghana is to stabilize prices and also help the economy to grow. You understand? And once the 25% will achieve that, I see no reason why. In fact, when you read the concluding part of their remark, the Bank of Ghana said that the bank will continue to assess incoming data and likely reduce the policy rate further should the disinflationary trend continue.
Okay. Some will argue that if you're really confident in the efforts that you're making and if the macroeconomic indicators are really true, then you should be confident enough to take that giant step. But we'll see how all of that fares. We'll go for a quick break. This is Business Focus here on TV3 with me, Michael Obudu. We'll go for a quick break. When we come back, we'll continue the conversation. Please stay tuned.
How may I help you today?
We'd like to open a bank account.
Sign here, sign here, sign here, and here. And now you draw direction to your house. I need your thumbprint. And I'll need your birth certificate too. No, I need the original.
A lot has changed since you banked like this. So have we. We've made it easier than ever to open an account online and bank on the go through our mobile app, online banking, and more. EcoBank, a better way to bank your way.
Sign here, and here.
EcoBank, the Pan-African Bank.
Morning, I wake up to this miracle sleeping soundly, but mornings weren't always this peaceful. I remember the sleepless nights, leaks that woke us both up, damp clothes and tears, and all I wanted was for my baby to be dry and comfortable. Then I discovered Flora Kids baby diaper. Its maximum absorption keeps my little one dry all night, giving us peaceful, restful sleep. And the stretchy side tapes, They make sure it's comfy even when she's on the
emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you would want to remember. Star 770 hash. Yes, star 770 hash is the new EcoBank money emergency number. Star 770 hash gives you instant access to loans, fund transfer, utility payments, airtime and data purchases, and so much more. Even without data. So there's no need to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Now, star 770 hash now for solution. With our conversation today, Dr. Boakye Adom, I understand you have some reactions to some of the comments that Nelson has been making. But while you do that, please let us know quickly what your projection for the policy rates by the end of year should be.
Okay, thank you, Michael. And there are a few things that I want to put across and why I think that the realistic policy rate should have been 20%. You see, the Bank of Ghana is doing what it should have started doing from the first review. That is the first quarter review. Because they maintain it. They hike it about, I think, 1% from 27 to 28. You know, that is why asking for 8% looks a bit big to my friend in the studio. if we look at the three indicators he mentioned that are used in determining the Ghana reference rate, the interbank rate, like he mentioned, has fallen about 35% from the beginning of the year. Then the Treasury bill rate has fallen about 62%. The policy rate was stagnant until the last review, which has changed it by about 7%. So if we look at the three indicators in the basket, the only one that has not followed a certain trend, to show a certain confidence in the economy is the policy rate. So like you rightly mentioned, if we believe in the trajectory of the indicators from the beginning of the year, then at this time, we should be talking about a policy rate around 20%. That is if I've done the needful in the first review, Okay. Having said that, I think that going forward, yes, government needs to be cautiously optimistic in terms of reviewing the policy rate. But you should not only think about the fact that when the policy rate comes down, prices will generally go up. It shouldn't be the case. You should look at the other side, that when the policy rate comes down, it can stimulate production, which will increase the production of goods and services, because now funds you can get credit at a very cheaper rate.
But
when
that
funds at a cheaper rate,
that point has been established. So for me,
yes.
Right as you speak, where you sit right now, how low should the policy rate end the year at? What figure would you put it at? Looking at the rate,
I'll put it at 18%.
18%.
18% minimum.
Okay.
Yes.
Very, very, very optimistic. Do you agree with him? 18 or higher?
Yes, I think I will be looking at 20%.
Ending the year at 20%.
Ending the year, yes.
That will be another 500 basis point cut from where we stand at the moment.
Exactly.
Okay, fair point. All right. Gentlemen, thank you so much. I have to pull the curtains on the conversation here today. That was Dr. Eric Boakye-Yaadom, Senior Fellow at the Africa Policy Lens, sharing his thoughts on that. We also had Nelson Kudjo-Kwagbeji. He's the head of finance at Merban Capital, a tax and finance expert, sharing their thoughts on the monetary policy rate and the fact that maybe it has to go down, but mixed reactions over there. Some think it should go down significantly, some think we should go down cautiously. But still on the issue of cost of borrowing, well, we've been exploring other options worth considering in our interactions with the head or the advisor to the Bank of Ghana on non-interest banking. That is Professor Gachi, who's been sharing his thoughts on how we should begin to position ourselves as a country to explore that option if we really want to be able to crack the code on accessing cheaper lending. This is what he had to say. All right, Prof, thank you so much for your time. So the Bank of Ghana, the Monetary Policy Committee of the Bank of Ghana has announced a 300 basis point cut in the policy rate. For you as an economist, how does this move sit with you?
Well, I think I'm comfortable with it because it follows a lot of analysis that tilted towards a drive down in the policy rate. And the analysis indicate that 300 basis point reduction is appropriate for the economy.
Some argue that there's the margin between inflation and the policy rate is beginning to widen even further. And really, if the macroeconomic indicators are real, then the policy rate should have dropped further.
Well, that sentiment is taken on board. But the issue is that you don't just look at the inflation, you look at other risks, upside risks and the downside risks to the economy and to the banking sector and the financial sector in general. And you also need to look at the risks to fiscal management and the rest. So you need to try to anchor in all those risks before you take a decision, so that decision in itself does not create a problem for the economy. So that is the reason why a 300 basis point in the view of the Bank of Ghana is appropriate.
Some have argued or opined that it should have gone as low as 20% because all the macroeconomic indicators are looking impressive. Inflation, exchange rates, all the likes have gained significant grounds in the space of about 6 to 7 months. Don't you think the Bank of Ghana has been overly cautious?
Well, the duty of Bank of Ghana is to look at all the parameters, look at the risk exposure, and then if a particular decision will heighten risk exposure, that risk exposure will have to be moderated. And that is the reason why the Bank of Ghana will not go in line with the sentiment of some analysts that we should go further down in the reduction in the policy rate. What is not available to others is the analysis that the Bank of Ghana engages in, the inflation outlook, the risk to inflation, the risk to fiscal management, the risk to the productive sector, the risks coming from the energy sector and the rest are taken on board before the Bank of Ghana takes its decision. So the decision is driven by a holistic and comprehensive look at the economy and, more importantly, how to accommodate risk when a decision is announced.
So, Prof, this is the first time we've seen a rate cut this significant in over a decade. In the last time the policy rate was this low was about 3 years ago. However, it is still quite high for industry people because some years ago the rate was below 20%. So really, how favorable is this going to be for businesses anyway? Well,
28% was unfavorable, and definitely 25% should be favorable to businesses. The thing is that when the Bank of Ghana realized that the good indicators that you are talking about are maintained in the next window of policy rate decision making, then that will be anchored in the decision making. So Bank of Ghana is doing everything possible to ensure that the right thing is done. It's not just on the face of it to reduce policy rate, but you must also gauge it against the risk exposure to the economy. And that is what Bank of Ghana is doing. And I believe when the indicators remain good, there will be further drive down in the policy rate, as announced by the governor yesterday. The governor did indicate that when we see the indicators remain good, then it means that the policy rate will also go down.
Despite the gains that have been made, for the average business person, cost of capital is still quite high, especially looking at the rates in the sub-region. For a country that hosts the AFCFTA, what practical options are there for businesses to access cheaper credit?
Of course, that is the reason why I believe you know that the IMF, for example, was indicating that we should continue to have a tight policy rate environment. But the Bank of Ghana has gone ahead looking at the indicators and the analysis to reduce the policy rate by 300 basis points. The analysis showed that the policy rate environment is favorable to be reduced, but the margin of reduction must be, that decision must be taken being aware of the risks to the economy. That is the fundamental of the whole thing. So that is what we should be looking at. Reduction in policy rates should not be for the sake of reduction. It should be for the sake of ensuring that an environment is created so that economic activities can take place without unwarranted risk to the environment.
But we know your outfit is pushing an agenda for non-interest banking. How does it come to the fore in the midst of this high cost of credit conversation?
Well, we know that non-interest banking and finance provide a comfortable arrangement for those who participate in it. It will take the burden of interest from clients. It will help the clients and the banks to share in the risk, as opposed to offloading risk to clients. So that is what we want to introduce to complement the existing structure that we have, so that we can expand the frontiers of financial intermediation and financial inclusion in the country.
What are the expected interest rates on a loan, for instance, from a non-interest banking institution?
we are not talking about interest. The thing is that you are going to share profit and loss with the client based on the agreement that you sign with them when they take the facility. So it will depend on how arrangement is done, what contract is signed, and again, what fundamentals have been looked at before the contract is signed. That will determine definitely the rate of profit sharing as opposed to the rate of interest.
So does the bank play any role in terms of ownership, or is just in financing in an interim?
Oh yeah, the ownership of the bank is just like a private sector engagement. So all the banks we have a chunk of them being private owned. Private sector people put out their capital to set it up, and a few of them have state owned. But here we are talking about creating an environment for the private sector to invest in this mode of banking, to create a different business model for our business people, a different business model to finance trade, a new business model to finance partnership in the country, to finance joint venture, and then to promote economic development.
So we know that another name for the non-interest banking is basically Islamic banking. I do know that the Islamic banking is backed to some extent by Sharia law. How does that reflect here?
Well, if you go to most North African and Middle East countries, it is called Islamic banking. In fact, if you go to some conventional and secular countries, and even a conservative country like UK, they call it Islamic banking. But if you come to some secular economies like Nigeria and other places, they call it non-interest banking. And when you mention Sharia, Sharia is only a set of rules. Sharia does not mean killing people here and there. So the principle emanates from that. And we cannot share away from that. But because we're rolling out this in a secular economies, we are just very sensitive to that. So it does not mean that the principle will change. The principle will remain the same. The principle of profit sharing, the principle of risk sharing, the principle of enhancing business development, the principle of financing trade without putting burden of interest on people will continue to be the foundation of this banking business model.
The interesting thing is that for a number of the indigenous banks, financing infrastructure projects remain some sort of a hurdle. Do you think this non-interest banking can be a game changer in that aspect?
So I need to indicate that globally, two aspects of non-interest banking and finance is driving the sector. Number one, in the banking sector regarding non-interest banking is leading in its presence, then followed by a particular capital market product that is what we call Sukuk, which means non-interest bond. That is actually taking a huge shape now. It has done a lot of raising of funds in Egypt. It has done a lot of raising of funds in Nigeria. Nigeria now, they are on the 6th Sukuk. That is helping in the construction of roads in that country. And we also believe that with the structure and the commitment of non-interest bond, and when they are issued, we have a diversified source of providing financing for long-term projects in the country. And that is one of the greatest benefits that the economy will be getting from non-interest banking and finance, apart from the banking presence. So we hope that will take place. And that is the reason why the journey is done together with the Securities and Exchange Commission. We have been having meetings with the Securities and Exchange Commission, and the meetings have been going well. They are also working assiduously to ensure that by the time that we come with our regulation, they are also ready with their regulation, so that the economy will benefit from no-interest bond to finance infrastructure projects for the public sector and for the government sector in terms of the agenda that the government has in the big push and other infrastructure development in the country. So that is what we are doing, and we are grateful that Securities and Exchange Commission is working closely with us to attain that goal for the economy.
The issue of risk. You are entering an industry that already has an over 20% default rates for non-performing loans. How is the Bank of Ghana planning to manage a risk element of this? Because I think your exposure is quite high.
Well, the exposure is not quite high. If you look at how it operates in other countries, the exposure rather is reduced. What is necessary is to create a number of liquidity management tools for the bank, especially when they have excess liquidity, how they are going to deploy them, since they're not going to use the traditional tools, which are interest-based liquidity management tools.
And that was Professor John Gachi, advisor to the Bank of Ghana on non-interest banking. And on that note, that'll be all for today's edition of Business Focus here on TV3. For more business stories, please visit our website, s3news.com/business. We'll be back later on News 360 with more updates on the world of business. I am Michael Obodu. Thank you for watching. As always, please stay safe. Catch you same time next week.
Business Focus is brought to you by EcoBank, Telecel,